Most people secretly carry a fantasy they never admit out loud. The fantasy that one day, after all the confusion and uncertainty, everything will come together in a single moment of brilliance. One perfect insight, one perfect trade, one bold decision that changes everything. That fantasy is powerful because it feels cinematic. It feels heroic. It makes you believe that your life is one decision away from transformation. And every time you hear stories about someone who made a massive prediction, took a wild gamble, or executed a genius-level play, that fantasy grows stronger. But what you rarely see is the part of those stories that didn't fit the narrative. You don't see the cost, the misery, the doubt, the long stretches where nothing made sense, and the moments where the hero almost quit. The world edits out the boring parts, the painful parts, the uncertain parts. But those parts aren't optional. They are the entire reality that success is actually built on. Take the famous investor who predicted the housing collapse. He saw something the world missed. Yes, but he didn't just wake up with a prophecy. He spent months in a dark room, hunched over documents that nobody else wanted to read, digging through thousands of mortgage files until the numbers blurred together. He wasn't gambling. He was drowning in data. And once he placed the trade, the real story began. Not the glamorous version, but the slow, grinding psychological torture of being right too early. For almost 2 years, he watched his clients turn against him. They wrote letters demanding their money back. They called him delusional. They threatened lawsuits. They accused him of gambling recklessly with their futures. He spent nights wondering if he had miscalculated everything. His health deteriorated. His marriage suffered. The pressure was relentless and suffocating. And even when the world finally realized he was right, he was so emotionally drained that he closed his fund to avoid ever repeating that experience. That part of the story never becomes a headline because it's not flashy, it's not triumphant, it doesn't feel legendary, but it's the truth. Now contrast that with the quiet man in Nebraska whose entire strategy is almost embarrassingly simple. Buy good companies. Hold them for a very long time. Ignore the noise. Never panic. That's it. No dramatic predictions. No do-or-die bets. No sleepless nights trying to time the next collapse. Just discipline repeated for decades. And that boring consistency built one of the largest fortunes in human history. The man with the big, heroic moment became a legend in a movie. The man who spent 60 years being boring became a billionaire. This same pattern repeats across every domain of life. In fitness, people chase 90-day transformations built on extreme diets, brutal training sessions, and unsustainable routines. They might see quick results, but 6 months later, most have gained the weight back. Meanwhile, the person who quietly eats a little better, walks daily, and builds habits, loses half a pound a week, and keeps it off for life. In entrepreneurship, the world glamorizes startups that raise absurd amounts of capital overnight. We don't hear about the slow, steady business that grows 10 to 15% each year, reinvests profits, avoids debt, and becomes a quiet powerhouse after 20 years. In writing, we idolize the one-hit wonder who vanishes for a decade, crafting a masterpiece. But the authors who publish consistently year after year are the ones who build massive audiences and financial stability. In software, Grand version 2.0 launches look exciting, but the companies that deploy small improvements weekly build more reliable products. In relationships, it's not the dramatic gestures that keep people together. It's the daily habits, kind words, small check-ins, consistent affection that build trust. Small steps repeated consistently reshape the world in ways heroics never can. Yet people constantly chase the heroic path because it feels exciting, it feels powerful, it feels like a shortcut. But shortcuts rarely lead anywhere except disappointment. The truth is that consistency is not just effective, it's anti-fragile. It gets stronger from stress. Miss a workout? You can recover tomorrow. One losing month? your long-term plan still stands. A project fails? You have other ones running. Consistent strategies bend without breaking. Heroic strategies shatter under pressure. This is especially true in trading. Most traders believe deep down that the big moment is coming. The trade that proves they're brilliant. The call that earns respect. The heroic insight that changes their account forever. But this belief is exactly what ruins them, because it makes them size up too big, take unnecessary risk, and tie their identity to a single outcome. The best traders understand that the individual trade means nothing. Their edge only shows up over hundreds of trades. A strategy with a 53% win rate can easily lose 10 times in a row. Only traders who risk small and stay patient survive long enough for the probabilities to play out. The people who size up massively on trade 3, thinking they've found the perfect setup, often blow up before their edge ever has a chance to express itself. Consistency builds pattern recognition. Heroic bets build delusion. Every small trade you take teaches your brain subtle details about your setup. You learn which conditions make it strong, which market environments weaken it, which time frames align best, and what red flags to avoid. But none of that learning happens if you take only a handful of oversized bets each year. You don't gather enough data. You don't build intuition. You don't grow as a trader. And when you finally do hit a big win, you learn the worst lesson possible, that you were right to trust your gut. Then you try again, and everything falls apart. This is where psychology becomes the real battlefield. Small losses are uncomfortable, but manageable. They teach you. They refine you. They harden you without breaking you. But a huge loss, a 20% or 30% hit, can fundamentally alter your mind. It creates trauma. It triggers panic. It makes you doubt your system, your ability, your discipline. You start trading defensively or recklessly. You overcorrect and spiral. Some traders never recover from one massive hit. This is why boring traders survive. Their losses are tiny. Their wins accumulate. Their psychology stays intact. They remain calm enough to make rational decisions. They can withstand drawdowns without spiraling. But there's another reason consistency beats heroics. Excitement is a trap. Large positions give you adrenaline. Checking your P&L every few seconds spikes your heart rate. You feel alive. You feel like you're playing a high-stakes game. Your brain gets addicted to that sensation. But good trading is not thrilling. It's boring. It's slow. It's repetitive. It requires waiting. It demands that you do nothing most of the time. This is why bad trading feels more satisfying than good trading. And social media intensifies this problem. Everywhere you look, people post their giant wins, their 500% days, their lucky breakouts. Nobody posts screenshots showing their boring, steady, 1% weekly gains. So you start believing that dramatic trades equal success, when in reality, dramatic trades equal volatility. And volatility equals destruction. Consistency requires humility. Heroics require ego. Consistency says, I don't know which trade will win, and that's okay. Heroics say, I'm sure I'm right this time. Consistency says, I will follow my rules no matter what. Heroics say, this one feels different. But here's the hard truth. Feeling is the enemy of good trading. Rules are the foundation. Discipline is the structure. Patience is the mechanism through which your edge expresses itself. The traders who survive long-term all share a unique trait. They are shockingly patient. They take fewer trades than everyone else. They wait for precise setups. They don't force action when the market is dead. They stop trading when they lose emotional control. Their restraint is their weapon. Meanwhile, the losing traders take 3, 4, 5 times as many trades. They scalp out of boredom, chase out of FOMO, revenge trade after losses, and size up because the slow path feels too slow. The gap in results between these two mindsets is enormous. Even the legendary investor from the movie wasn't really a hero. His famous trade wasn't a stroke of instinct. It was the result of years of meticulous research and steady, methodical work. The dramatic moment was built on thousands of quiet, unseen hours of boring analysis. And after the trade, he went right back to doing what he had always done: consistent, disciplined investing. The world remembers the dramatic moment. He remembers the long grind. The reality is that even heroes rely on consistency. It's just that the spotlight only captures the climax. The danger for traders today is that the world has turned trading into entertainment. Apps celebrate when you place a trade with confetti animations. You get dopamine hits from price alerts. Crypto markets are open 24/7, offering endless opportunities to gamble. Leverage amplifies everything, turning minor moves into emotional earthquakes. The constant stimulation rewires your brain to crave action instead of results. If you don't actively fight this, you get addicted to volatility instead of rewarded by discipline. So the only way forward is to build a system that protects you from yourself. Shrink your position size until individual trades feel irrelevant. Turn off notifications. Hide your P&L during market hours. Set concrete limits on the number of trades you take. Force yourself to follow rules instead of impulses. You must build barriers between your emotions and your execution, because your biggest enemy is not the market. It's your instinct to act dramatically. And here's the mental shift that changes everything. You must stop thinking of yourself as someone trying to get rich and start thinking of yourself as someone running a professional trading business. Businesses follow systems. Businesses track data. Businesses don't rely on heroic randomness. Every trade you take is a vote for the kind of trader you are. Trade outside your plan. You voted for being an impulsive gambler. Skip a weak setup even though you're bored. You voted for being a disciplined professional. Stick to your rules during a losing streak. You voted for long-term survival. You won't vote perfectly. No one does. But over thousands of trades, your identity forms from the majority of your decisions, not the dramatic ones. The traders who survive long enough to become consistently profitable understand something most people never learn. You don't succeed because you avoid pain, boredom, or frustration. You succeed because you learn how to move through those states without losing your mind. Anyone can follow a plan when the plan is working. Anyone can stay calm when they're winning. But the real test, the test that decides whether you will ever succeed long-term, is what you do during stagnation, during drawdowns, during the weeks where nothing makes sense, and the only thing screaming in your head is the urge to do something, anything, to feel in control again. Most people fail not because they lack intelligence, but because they cannot tolerate the emotional discomfort of inaction. They cannot sit through uncertainty without poking at it. They cannot resist the temptation to speed things up. They cannot accept that good trading often feels like watching paint dry, so they sabotage themselves by forcing trades. They think they're making things happen, when in reality, they are destroying the very edge they claim to rely on. Consistency demands that you stop searching for the perfect moment and start mastering the ordinary ones. That's where skill is built. When markets are slow, when your setup hasn't triggered in days, when you sit at your desk and your brain whispers, you're wasting time, when you see other traders posting massive wins, when you feel like you're falling behind, those moments are when traders break their discipline and ruin months of progress. The traders who survive develop an internal stillness. They let boredom exist without reacting to it. They let uncertainty pass without forcing clarity. They let the market do what it does without demanding that it give them an opportunity. They treat trading like a long conversation, not a battlefield. This type of control isn't glamorous. Nobody cheers for patience. But patience is the most valuable currency in trading. Without it, your edge doesn't matter. Drawdowns expose everything. They expose weak strategies, weak discipline, weak emotional resilience. But they also refine strong traders. A disciplined drawdown is one of the most important experiences you can have. Losing money while following your rules teaches you humility. It teaches you that your system isn't perfect, that edge is probabilistic, that randomness always has a vote. Drawdowns are where professionals earn their stripes and gamblers get eliminated. A professional looks at a string of losses and says, "Good, more data." A gambler looks at a string of losses and says, "I need to change everything right now." The professional journals each trade, calculates R multiples, reviews the context, and identifies whether the losses came from bad execution or simply normal variance. The gambler throws their system in the trash, buys a new course, switches timeframes, and starts chasing trades they don't even understand. There's a rule very few traders internalize. Your system is not measured by how well it works when everything is trending beautifully. Your system is measured by how well you stick to it when it hasn't paid you in weeks. If you can maintain discipline when the market seems hostile, you're already ahead of 90% of traders. And yes, sometimes your edge genuinely stops working. Markets evolve, liquidity changes, volatility cycles shift. A strategy that dominated for years may suddenly fall apart, but the consistent trader doesn't blow up when this happens. Their risk is small, their emotions are grounded, their habits are strong. They have enough capital and psychological bandwidth to analyze, adapt, and rebuild. The dramatic trader, the hero type, doesn't have that luxury. When their single big idea stops working, their identity collapses with it. They go from believing they're brilliant to feeling like imposters. And because they bet too big, they often don't have the capital left to sustain the next version of themselves. This is why consistency is more powerful than heroics. Consistency is self-renewing. It's sustainable. So, it lets you survive the cycle long enough to prosper from it. The irony is that the closer you get to real mastery, the less exciting trading feels. You stop craving action. You stop needing adrenaline spikes. You stop staying glued to your screen. You stop obsessing over every tick. You realize that your job isn't to predict the future, it's to respond intelligently to the present. There is no climax. There is no final boss. There is no trade that validates you forever. Trading becomes ordinary, and that's when it becomes profitable. But to get to that point, you must give up the fantasy that there's a single moment that makes you a real trader. That moment doesn't exist. The closest thing you'll ever have to it is the day you realize you no longer need the big moment. The day you stop trying to be special and start being consistent. The day you accept boredom not as an obstacle, but as a signal that you're doing things right. When you hit that point, your relationship with the market changes. You stop fighting it. You stop chasing it. You stop begging it for opportunities. You stop trying to outperform everyone on a single trade. Instead, you simply execute your plan, let probability do its work, and let time amplify your edge. The traders who make it long-term don't glow with genius. They glow with steadiness. They accumulate thousands of tiny edges. They understand that every small decision compounds. They accept that the reward is not the feeling of victory, but the result of discipline. Your trading career will not be defined by the few trades you brag about. It will be defined by the thousands of trades nobody ever sees, trades where you sized correctly, followed your plan, honored your stop, controlled your impulses, and repeated the same boring process without deviation. This is not the story people want to hear. People want explosions, miracles, breakthroughs, lottery moments. But real wealth is rarely explosive. It is methodical. It is constructed brick by brick, habit by habit, trade by trade. It grows slowly, quietly, invisibly, until one day, after years of consistency, it suddenly looks massive. When you start treating consistency like a superpower instead of a chore, everything changes. You stop being seduced by dramatic trades. You stop believing you need to make up for lost time. You stop fantasizing about catching the exact top or bottom. You stop measuring your worth by weekly performance. You start seeing trading for what it actually is, a statistical game of discipline, patience, and long-term behavioral control. Most people will never experience this transformation because they're too attached to excitement. They want trading to feel dramatic. They want to feel like geniuses. They want the world to see their brilliance. But the traders who succeed don't need any of that. They're not trying to impress anyone. They're trying to survive, grow, and compound over decades. Imagine two traders. One takes massive swings, experiences wild emotional highs and lows, constantly adjusts strategies, and blows up every couple of years. The other trades small, journals carefully, sits through boredom, improves gradually, and builds quietly. After 10 years, the dramatic trader has stories but no money. The consistent trader has wealth but no story. And the world will always talk about the dramatic trader. But the consistent trader gets to live free. The question is simple. Do you want stories or do you want results? Because if you truly want results, you must accept that trading mastery looks nothing like the highlight reels people post online. It looks like discipline on an ordinary Tuesday afternoon. It looks like walking away from a market that isn't giving you your setup. It looks like risking 1% when everyone else is risking 20%. It looks like doing the same thing today that you'll do a month from now and a year from now. Mastery looks like boredom handled well. The turning point in your trading journey will not be your first big win or your first breakthrough trade. It will be the moment you trust your process more than your impulses. It will be when you understand that you can lose a trade without losing control. It will be when you recognize that every small action feeds into a larger identity. You become a disciplined trader, one decision at a time. Risk small. Trade your setup. Journal your behavior. Sit through boredom. Respect drawdowns. Ignore noise. Let probability work. Do these things relentlessly, and you will outlast 99% of traders, not because you were more talented, but because you were more consistent. Success in trading belongs to the ones who refuse to self-destruct. You don't need to be the hero. You don't need to predict the next crash. You don't need to take massive bets. You don't need to impress anyone. What you need is a process strong enough to follow, simple enough to repeat, and boring enough to keep you grounded. The traders who quietly survive end up becoming the traders who quietly thrive. In the end, the world will celebrate the dramatic stories, the victory laps, the once-in-a-lifetime trades, the people who saw something nobody else did. But they'll forget the thousands who tried the same thing and lost everything. The world celebrates excitement. The market rewards discipline. Be on the market's side. Be the trader whose success is too boring to talk about. Be the one who is still standing 10 years from now, not because you were a genius, but because you were consistent.